Make sure you guys get your 5 stocks from Moomoo. Link down below. Deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Literally free money. Link down below. And now let's talk about Draftkings, which is an absolute disaster right now. The stock is down 18%. You guys can clearly see that here on the 4-hour chart. And if I show you guys the intraday chart, you'll see why it dropped. They report earnings this morning, which, mind you, we're going to talk about that as well in this video. So if you all find value, hit the like button, subscribe. Let me know your thoughts, as always, in the comments. And full disclosure, I am a shareholder in Draftkings. It is one of my speculative plays for the longer term here. So Draftkings, like I said, is down 18% right now. It's currently about 12 p.m. on the East Coast, so we do have some time left in the session. And overall, again, it is getting crushed. So they reported earnings this morning. They did Q4 revenue, and mind you, these earnings were pretty good. But one thing that is killing them is, well, you're going to have to wait for the rest of this video. So Q4 revenue came in at $473 million versus $446 million estimated. So they beat Q4 revenue by about $30 million compared to the estimate. That's great. They did EPS of 82 cents in the red, so they're still bleeding money. They lost 82 cents per share. And the growth from last year in the same quarter is pretty substantial. You know, they did, again, $473 million in Q4, but in Q4 of last year, they did $322 million. So they're growing a lot year over year. And Q4 monthly unique players for its B2C unit is up 32% year over year. Average revenue per monthly unique player is $77, which is up 19% year over year. And that's what you really want to look at for DraftKings, guys. How much money on average is each unique player spending, right? That's per month. So $77, again, up 19% year over year. And the thing is, they raised their guidance. They raised full year 22 sales guidance from $1.7 to $1.9 billion. That was originally what the range was. Now, in the earnings call, they talked about $1.85 to $2 billion in terms of full year 22 sales. So that's above what it was, so that's a good sign. And they see about a 2022 adjusted EBITDA loss, which this is bad. Again, going back to the point where they're bleeding money. We'll talk more about that in a second. They see a loss of $825 to $925 million. So like I said, guys, stock is getting demolished. You guys can see it initially spiked to $23.86 when the earnings came out, and it hit a low of $17.45. So if we're looking at that spread of about $6.40, the stock is down 27% from, or at least it was, from top to bottom. So the chart clearly is downtrending. This thing's getting slaughtered. It's clearly getting now rejected by the 180 moving average. Maybe it goes down to test the lows from the end of January. So let's talk a little bit about, obviously, more about DraftKings. Let me pop up some numbers and their earnings presentation from today, guys. And quickly, let me do this quickly. Let me lower my face here so you guys can see what the heck we're even looking at, right? So this is the earnings presentation that came out today. We're going to look at some numbers, how much money they made, how much money they are losing. So Q4 and current business highlights: $473 million in Q4 revenue, driven by strong customer acquisition, increased customer engagement, healthy customer retention. That's 47% year-over-year revenue growth in Q4, and 19% year-over-year B2C average revenue per monthly unique player. So that's 19% growth. We talked about that already. And 32% growth in monthly unique players in Q4 year over year. Very solid. Great organic growth trends in core B2C business. 65% same state year over year online sports betting growth in Q4. That's great. 61% iGaming, GGR growth in Q4, and they launched online sports betting, which you guys remember this, and they're growing very quickly in New York. I was listening to the earnings call right before I actually making this video, and I still have about 30 minutes left on the earnings call. They were talking about New York. It's growing very quickly. I believe they're growing faster than any state when they initially launched, if I remember correctly, and they launched in Louisiana, and they launched DKNG branded online sports betting in Oregon, which they also talked about in the earnings call. So they are now live in 36% of the U.S. population for online sports betting and 11% of the U.S. population for iGaming. So that goes to show there's a lot. The growth trajectory is there because they're in a very small part of the U.S., especially with iGaming, guys, which is only 11% of the U.S. population. And they're actually making a significant effort to try and gain California and Florida. They also talked about this in the earnings call, but it's not going too well with, I believe, Florida. They try to get them to put it on the ballot for, I believe, one of the upcoming elections. Didn't get to do that, so that might be delayed, but they're still growing in other states like New York, Louisiana, Oregon, and the list goes on, right? But once they nail, and it's probably going to come at some point, once they nail California, the biggest state, that state's freaking huge. Once they nail Florida, it's more business at the end of the day, right? And of course, they're pitching to these states like, oh, you can make this much money, hundreds of millions in tax revenue. So that's how they're pitching it. In the earnings call, they were talking about how in California with the homelessness problem, this, that, the third, they can use this money, tax money from gambling, right, to then, help that. I don't know if that's going to work. I mean, that's what they're trying to do, though. So that's what they talked about again in the earnings call. So go check that out for sure. And if we scroll down a bit more, let's see here if you can see it, guys. If we come down a bit, you guys can see the GAAP operating expenses. We're not going to look at that for this video, or the earnings per share build. Forget that. This is what I want to focus on, though. Let me see if I can make this bigger so we can see it together, and I'll actually move my face right here. Take a look. This is the Draftkings P&L and adjusted EBITDA reconciliation. So this shows pretty much, actually no, this is not what I wanted to see. This is what I wanted to see. Boom. Pretty much same thing. This is pro forma P&L, EBITDA reconciliation. So look, $1.3 billion in revenue for 2021. That's what they did. Pretty strong year considering in 2020 they did $640 million. So they pretty much doubled up revenue year over year. And this is why the stock's bleeding. This is why the stock is bleeding, because they're losing a lot of money, guys. This company is bleeding money, and to acquire all these customers, they have to, because they have to put a lot of money into sales, marketing, and you guys can see it for yourselves. Like I said, $1.3 billion in revenue is what they made, right? Top line 2021. Cost of revenue was almost $800 million. Sales and marketing, almost $1 billion in sales and marketing. Product and technology, $250 million. And general and administrative, $830 million. People have to get paid. There's expenses there, $830 million. So overall, loss from operations, $1.5 billion. So they made on the top line $1.3 million. They lost $1.3 billion, and they lost $1.5 billion on in terms of from operations. And then we have interest income, warrant liabilities, gain on warrant liabilities, other interest income, or other net income, whatever. I'm mixing up my words here, guys. And you can see loss before income tax provision, $1.5 billion. And their net loss is $1.52 billion. Adjusted EBITDA, minus $670 million. So they're losing a lot of money. And what you have to realize is, for this company to do well, or for the stock to do well, they're going to have to start making profits, because a lot of these big institutions, these big firms with billions of dollars under management, a lot of money, they're not going to buy stocks that are just bleeding money. They're going to wait, and they're going to wait till they profit and consistently profit. Then they're going to start buying, even though that means they're going to miss on a lot of the run-up, because they don't want to take the risk as I'm looking to take the risk of holding it while they're unprofitable, right? That's where you can make a lot of money. If you buy a stock that's unprofitable and then it gets to profitability and a lot of people start buying in, the big boys, if you want to call them that, right? And then you make that huge run up. But there's a lot of risk involved because DraftKings might never make a profit. They might go bankrupt and then I could lose all my money. And that's a risk I'm willing to take. And that's why it's a speculative position in my portfolio. So keep that in mind. Keep that in mind. If they start making profit, and in the earnings call they said 1-2 years, maybe 3 years could be stretching it, but they're looking to make profits pretty soon here. It's probably going to be bumpy for the next year or two. But hey, if they do in the next couple of years, big money comes in, DraftKings could do very well, especially if they continue on this growth trajectory. They keep getting these states under their belt. They're going to do very well long term, and that's why I'm holding them as a more speculative position, like I said. So overall, that's it. I'm going to wrap up the video, guys. That's what I wanted to talk about for today, just breaking down DraftKings numbers and why they're really selling off and kind of my opinions on there. And again, full disclosure, I'm long DraftKings. I'm holding, and who knows, I might buy more shares if it goes under $17. I might add to my position. So what do you think? Drop me a comment, hit the like button, subscribe, join my Patreon if you guys want to get all my buys, sells, call outs, morning update videos, all that good stuff's on Patreon, link down below, or you guys can go to StockSurfest.com/Patreon. And if you want some free money, hey, who doesn't like some free money? Get your $50 from M1 Finance. That's linked down below with a $100 deposit. And don't forget Moomoo, the best promotion out right now other than M1 Finance. Both of them are great. $50 from M1. You can get 5 stocks up to $3,500 each from Moomoo with a $100 deposit. That's linked down below. Get your money, guys. Literally free money. I'll catch you in the next video. Peace out.